Hello, and welcome along to Gender Pay Reporting, a webinar that forms part of EW's for the HR Manager series. Today we'll be discussing the introduction of gender pay reporting and how this can affect your business. In the webinar today, we're going to have a look at what is gender pay reporting, who, when, where, and what do we need to report on, what staff and pay is included, reporting requirements, and finally, next steps. Whilst there is individual protection for women who are paid less than their male counterparts and vice versa in respect of the equal pay provisions of the Equality Act, statistics show that average pay for women is less than men, and this is referred to as the gender pay gap. So what is it precisely? Well, it is a measure of the difference between the average earnings of men and women. The Office of National Statistics, or the ONS, has recorded data nationally since 1997, measuring the gender pay gap by reference to mean and median of pay for men and women. But how bad is it? Well, in 1997, the gap between women and men's average pay was 27.5%, which means that men's average pay was 27.5% higher than women's. Thankfully, the gap has reduced since then, and in 2006, the gap was 9.6% for full-time employees and 18.1% for all employees. So there is still an issue to address. So what are we doing about it? Well, while there has been improvement in the right direction, the government has made it its priority to reduce it further. A consultation paper was issued in 2015 proposing that employees with 250 or more employees must publish their gender pay gap information. What was the hope? Well, that being that the greater transparency would encourage employers and employees to consider ways to reduce any gap, and now regulations have been introduced to cover this. In addition to reporting on the pay gap, the regulations require employers to provide separate data on the gap in respect of bonus payments. ACAS have issued detailed guidance on the obligations, which is certainly worth checking out, and it's definitely advisable to take advice on how this might affect your business. So, the who, where, when, and what, the big important questions. Who will have to prepare reports? So the obligations apply to any private or voluntary sector employer with 250 more employees on the snapshot date. The trigger is the number of employees at the snapshot date, and it should be noted that these regulations don't apply to public authorities. There's separate regulations that have been issued for those. Employees, for the purposes of calculating whether there are 250 more of those employed, include those under a contract of employment, a contract of apprenticeship, or a contract to provide work personally. This will include employees, casual workers, and some contractors. As for group companies, each individual legal entity is treated as a relevant employer. If there are a number of individual group companies who each have more than 250 employees, each of those companies will have to prepare their own report. There's no provision for preparing one group-wide report. While there's no requirement to prepare a report unless there's 250 employees, then those close to it will be encouraged to prepare a report voluntarily if they are getting close to that mark. So, where does this apply? Well, it applies to companies in England, Wales, and Scotland, but it doesn't apply to Northern Ireland. In terms of when this kicked off, well, the gender pay reporting obligations came into force on the 6th of April 2017. Finally, what are the requirements? Well, let's have a look at that in a little bit more detail. Relevant employers will have to report annually on the following: the difference between the mean hourly rate of pay between male and female employees in the pay period within which the snapshot date falls, the difference between the median hourly rate of pay between male and female employees in the pay period within which the snapshot date falls, the difference between the mean bonus pay paid to male employees and that paid to female employees in the 12-month period ending on the snapshot date. There's plenty to be getting on with. The requirements continue. We need to report on the difference between the median bonus pay paid to male employees and that paid to female employees in the 12-month period ending on the snapshot date, the proportions of male and female employees who were paid bonus pay in the 12-month period ending on the snapshot date, and finally the proportions of male and female employees who were in the lower, lower middle, and upper quartile bands in the pay period within which the snapshot date falls. An awful lot of information that we need to report on, and so it's absolutely key that you take advice when preparing the report. So what employees and pay actually gets taken into account? The reporting duties only apply to relevant employees. This will include employees, casual workers, and some contractors if they're contracted to perform work personally for and under the direction of another person. That can be quite technical, so take advice. It is actually the same definition of employee contained within the Equality Act, and so it is wider than that, say, used in unfair dismissal claims. Agency staff will be excluded, given that they're more generally going to be regarded as employees of the employment agency. In addition, and importantly, those employees who receive less than full pay because they're on leave are excluded for the pay reporting obligations. The employee will not be regarded as receiving full pay if, during the relevant pay period, they've been paid at a reduced rate or nil as a result of being on leave. If anyone falls into that category, then do take advice. Now, what pay needs to be taken into account and what shouldn't? The pay gap is calculated by working out the gross hourly pay rate of each relevant employee. Only ordinary pay is taken into account, and it includes things like basic pay, allowances including those for ancillary duties such as fire warden, location allowances, recruitment and attendance allowances. It includes pay for piecework and pay for leave, but only if they get full pay. Finally, it includes shift premiums. The following, however, are specifically excluded for the purposes. These are overtime, redundancy or termination payments, pay in lieu of leave, remuneration provided otherwise in money, so things like benefits provided through salary sacrifice, and any other benefits in kind. Finally, expenses incurred wholly or necessarily in the course of employment are excluded. Just a note on salary sacrifice. These benefits aren't included in the ordinary pay calculation. So gross pay, after any reduction in pay for salary sacrifice arrangements, should be used. Bonus pay is taken into account in the ordinary pay calculation if the payment is made in the relevant pay period in which the snapshot date falls, as well as for reporting on the bonus pay gap itself. You should take advice when calculating these amounts, which can be sought from your advisor. The government has also issued some guidance on what pay should and shouldn't be included, which I would certainly suggest is taken into account. So in terms of your reporting requirements, how should the information be presented? Well, there are no set requirements as to how the information should be set out, as long as the 6 obligations we discussed earlier have been complied with. The only other specific obligation beyond that is that the written statement confirming the accuracy of the information must be provided and signed. And there's a long list of individuals, depending on the type of organisation that you have, that this applies to. A question we've been asked is, can the employer give an explanation for any apparent pay disparities? And the short answer is absolutely. And in fact, the government are encouraging this. This can be helpful to explain, perhaps give some context to an apparent discrepancy that may appear from the information, along with setting out any steps you may be taking to address the pay gap if there is one. So where do the reports need to be published? Well, the snapshot date is the 5th of April of each year, and the report needs to be published within 1 year of that snapshot date just passed. Therefore, by way of an example, the pay gap information falling on the 5th of April 2017 will need to be published on the 4th of April 2018. The regulations require employers to publish the information on their own website and must retain the information online for at least 3 years. The information must be presented as well in a format that's acceptable to employees and the public. In addition, the information must be uploaded onto the government website. First, you will need to have an account. So once you've got that, you can upload the relevant information and it can be viewed by the public. Finally, what happens if you don't comply? Well, technically, there are no specific enforcement provisions contained within the regulations. However, you should be aware that the government propose running periodic checks for non-compliance, although there don't appear to be any plans to name and shame as they currently do with the breach of national minimum wage laws. The Equality and Human Rights Commission could actually seek to enforce action against any non-complying employer, though. The biggest risk here is that there is the possibility of adverse publicity for those who don't publish the information, because the implication is that those employers might have something to hide or they don't take the issue seriously, something that we perhaps want to avoid. So what should you be doing now? Well, whilst you don't actually have to prepare a report until next April, it would be a really good idea to take the following steps. Work out whether you're a relevant employer at the snapshot date, namely, did you have 250 or more employees on the 5th of April 2017? For most employers, this might be quite easy to establish. For those where it is a little closer to call, take some steps to carry out the calculation. If you are a relevant employer, work out what employees will be called. In particular, identify those groups of employees who may be more difficult to pinpoint, for example, casual workers or contractors. Start to put in place processes that will make it easy to collect the information you need, in particular the elements that need to be included in your ordinary pay calculations. You might consider actually carrying out a dummy run to see whether or not there are any clear disparities that could potentially be addressed before the snapshot date. For example, this might give you the opportunity to consider steps that could be taken going forward, which could be referred to within your explanatory statement. Finally, my best top tip, take advice. This can be a tricky area and you want to make sure you get it right. To find out more about our For the HR Manager series, get in touch at inquiries@elliswhitham.com.